Hey, and welcome back to the YieldMax 100 Share Challenge. We have been tracking what would happen if you had bought 100 shares of all the YieldMax ETFs starting in December of 2024. This week we are on the fourth payment for Group D, but before I get started on this, I wanted to give a little introduction to a new series I'm going to start. We've got 4 weeks of data now, so I am going to start a new series on if you can use the gig economy to create a debt snowball using YieldMax ETFs. And I'm going to be doing this in real life with real money in a real brokerage account. And I'm going to set up a debt snowball calculator for some credit card debts. And we are going to actually invest in real live ETFs from the YieldMax funds. The goal will be to create consistent dividend returns to create a snowball. I'm going to have that set up hopefully by next week. Last week I signed up for DoorDash and I went out and did it for one session just to make sure everything was working. And this weekend, I will be going out and doing some more, and we will start buying real live stocks, and I'll keep you up to date on that. So if you could do me a favor, and if this interests you, go ahead and hit that like button, and go ahead and subscribe and ring the bell notifications. I will go through on the new series how to set up that snowball calculator, and then any tips or tricks I learn while dashing or using any of the other gig economy, I will keep you up to date. And let's get started with the payment on Group D for today's video. As you can see, we are down about 5,000 total. We have a new fund, it's WNTR. And it has not paid yet. That was on their website. So the first one we have is AIYY. We're up to 123.75 shares, and the price is down to $4.47. You can see we're down $4.60 total for the life of the fund. AMZY, 113.23 shares. We're down to a cost of $15.19. Let's remember we've had a really bad week in the markets, and actually a real bad few weeks. So everything's down. So most of these will be down. APLY is up 108.77 shares, and this one dropped down to 1337. DISO is 109 shares at 0.62, down to 12.20. MSTY, we're up to 132.18, so we're really gaining on our shares. The price is down to 1988. We made 212 the day of payment, so there's a nice recovery for a one-day payment, but we are down 1,000 overall, as you can see, because of that high start price. SMCY is another good dividend payer. It's up to 134.78 shares, and it's down to 1827. It's lost about $1,000 also. Winner, we have the 100. This is starting at the 100 shares, with our average share price of $52.97. So nothing there. This one looks funny. XYZY, if you've been on the series, this used to be SQY. The underlying renamed itself from SQ to XYZ. So we have redone that. It's up to 117.5, down to $10 a share, 10.04. And then our short, which is the inverse, YQQQ, is up to 109.34, and it dropped just a little bit to 1701. So let's take a look at that in the sheets. Here's our AIYY, excuse me. You see the shares have climbed steadily as the price has fallen steadily. We are down $4.27 a share, and we have lost a total of $3.20. Oops. This number, I was playing around earlier, that's the monthly return. So your dividend got you 5.14% of your share price. Dividends received, we made $27.08 in dividends this cycle. With DRIP, we are at $139.17 in dividends, which is a 15.92 return on your initial investment. If you didn't use DRIP, you're at $129.95, which is 14.87. And as we go forward with the gig economy paying our debt snowball, we're going to use a lot of no DRIP. In the beginning, I might put them in as a DRIP just to until I get some money, make sure I have enough money to make the first couple of months of minimum payment plus a little extra, and then we'll use the dividends in the future. So let's go on to AMZY. This one is climbing slowly. We're only at 111.23 shares. We've lost 3.93 a share, 222.42 overall. 10% return on investment. Apple. So Apple is going to be scary for the next month with the stuff going on in China, but hopefully they've moved enough of their manufacturing out of China that it's not too terrible. However, when everything settles down, the upside could be okay, because we've lost $5 a share, basically $4.99, $381.75 in loss. So going from $5 a share and only losing $381.75, we've made 133.19 with DRIP, 7.25%, and 7.04 without. DISO, we're up to 109 shares, and we have lost $4.66 a share price. Total loss is $348.64. We're at only 8.2%. As you can see, this one has not got a lot of good dividends, but they're fairly steady. So that's if you're looking for steady. Big dog, MSTY. MSTY took a plunge. As you can see, this share price has steadily fallen. We're down $9.59 in share price. Like I said, we are up 132.18, so we've gained quite a few shares. As you can see, we have only lost $319.26 because of these high dividend payments. And we've received a total of $165.43. That was our dividend. With DRIP, $770 total with DRIP, 26.16%. So that's really nice. And $23.80. So even if you were taking this and putting it in your pocket, you're still making a good dividend payment. SMCY is the other big one in the fund, and it's up to $134.78. This one was lost last week, or last month's video. You remember this was in the green, but we did have the pretty big drop. So we're down 848 overall with that 1 month drop. But like I said, this is the market tank. We have lost only $208 overall. Last dividend was a good one at $1.50. We are at 30% return. So that's going to be, if that holds, that'll be over 100%. So this will be a less than or right at 1 year return on to get to 100% return on your investment. Now, that doesn't mean your portfolio will be 100% more than it was. What that means is you'll have received 100% of your initial investments in dividends. But with the stock price keep falling, you can see that we're not actually positive. If you use this one as just cash, you would have some nice monthly payments. And this is where we're going to use the gig economy. Probably in MSTY and SMCY are going to be a couple of the first ones to try and get up to. The goal is going to be to get to $50 a month in dividend payments. That will be, for a small credit card, you should have like a $20-$25 minimum payment, and then another $20 or so for your snowball. But that's the first, that's step one goal. Here's our XYZY, which used to be SQY. I left the old name in here so I don't forget either. We're at 117.05 shares. We've lost 882 a share, 710.82 overall, 12% return, and 11.41 with no drip. Okay, YQQQ, 109.34 shares. We are just a little bit down, 27 cents down after 4 payments. So this one's keeping its initial price. We're up 131.87 in total. So that's good. This investment is obviously with drip. And you can see the payments the last 2 months as the market's gone down. The shorts have performed better. So they're up, they've almost doubled their 44.37 in dividend price. We're still only 9.15 return and 8.85 return because, as you can see, these don't pay a lot per month, but they are the inverse. So, and then winter, there's our initial. So that's our portfolio for this month. See, stock market's been on a little bit of a roller coaster. You know, if you're scared, talk to a professional. If you're in index funds and you are young and still putting money in, your dollar cost averaging could really pay benefits. But I'm not going to tell you what to do. Please get with a professional. You could probably find one in your market that'll give you a free consultation, at least help you get on a path. Or maybe if you have an employer with a 401, they can usually, you could chat with them sometimes. So that's week 4. Next week starts week 5, and our gig economy paying off debt snowball. So remember, like and subscribe, hit that notification so you can keep track of what's going on with how fast we can get that debt snowball going. Once again, I thank you for joining me today, and we'll see you in the next video.